Hi everyone, welcome to the April 2018 Equity Platinum Fund webinar. I'm John Long, one of the managing directors, and here with me is Greg Sally.
Good morning, everyone.
Thanks for attending today. We are going to go through an overview of the Equity Platinum Fund. If you're interested in more information, please request an offering memorandum for the full details.
Equity Residences is raising $50 million for Equity Platinum Fund, which buys luxury real estate and provides investors with both vacations and property appreciation. These properties are professionally managed, and you'll receive both monetary dividends and rent-free vacations over the next 10 years that will own the properties. We offset the operating costs by renting out the properties to high net worth individuals, and we also provide access to hundreds of properties around the world through our partnerships with Elite Alliance and Third Home. The history of Equity Residences is that we were launched in 2012 with our Equity Villa Fund, which in 2012 acquired properties in Hawaii and Palm Springs, California. We then developed a partnership with Elite Alliance, which provided access to hundreds of additional luxury fractional resort properties around the world. And then in 2015, we announced our second fund, the Equity Platinum Fund, and placed the residents under contract in the Manalani Resort on the Big Island of Hawaii. Later on in 2015, we announced a partnership with Third Home, which provided access to hundreds of high-end vacation homes around the world with an average value of roughly $2.4 million. In 2016, March of 2016, we closed the Equity Villa Fund to new investors with 100 investors in the fund. And then in June of 2016, we launched the Equity Platinum Fund and acquired our Lake Tahoe resort residents. As of 2017, the Equity Villa Fund was up over 50% in appreciation to date, and Equity Residences in 2018 has reached 16 residences with acquisitions in Tuscany, Dominican Republic in the Caribbean, and Costa Rica. That includes 6 Platinum Fund properties and 10 Villa Fund properties, and in total we plan to have 20 to 25 Platinum Fund properties.
Thanks, Greg. We're going to walk through today and take everyone through the homes in our Platinum Fund portfolio. We're going to go through our investment philosophy and then what you should expect from an annual expense and return and a cost per vacation night. And ultimately how you make money with Equity Residences while you're enjoying priceless memories with your families. We'll go through how often you get to use the homes and the equity experiences when you vacation. And then Greg and I will do a live Q&A with everyone that's here on the webinar. So I want to start with our portfolio because we did launch the fund back in 2012 and we've had great success building a pretty robust portfolio over the last 6 years. As Greg mentioned, we started with residences in Maui and Palm Springs. We've added residences in Kauai and Kona and Park City on the west. On the East Coast, our first property was Longboat Key, Florida, and then we added these beautiful other Florida residences on Captiva Island and in the Florida Keys at Key Colony Beach. And then since then, after we launched the Platinum Fund, we added another Florida residence in Water's Edge in Rosemary Beach, Florida, and another ski destination in Lake Tahoe. Then we've also expanded internationally and recently launched properties in Siena. It's a Siena penthouse, it's spectacular in Tuscany, Italy. And then a 6,000 square foot house in Cap Cana Resort in the Dominican Republic. And we're just about to launch a beachfront house in Costa Rica. So our first property was really, it's a gem in the portfolio. It's a ski in, ski out, mid-mountain right below the Ritz at North Star in Lake Tahoe. It's a modern type glass house situated right on the ski run. Spectacular place to take your family. And what you have when you're at this destination is you can see here in the photos, not only are you literally sitting on the ski run, you can jump off that deck where the fire pit is right onto the run in the winter. But you also have access to a private leisure club called the Treehouse that's mid-mountain. The private club has a basketball court, a spa, swimming pool, game room, everything you need to take the family up and enjoy an après ski up at the private club.
On the Big Island of Hawaii, we're in the Manalani Resort. We have a home right on the golf course with ocean and sunset views, has a private pool and hot tub, and it's right really close to the private Manalani Beach Club, where you have a beautiful white sand beach and just a restaurant there and everything you need to really enjoy your time in Hawaii. It's a very kid-friendly beach. On the resort, you have all kinds of restaurants, golf courses, and the house itself is spectacular. It's the ultimate in indoor-outdoor living with fold-away pocket doors and outdoor kitchen area. So it's just an amazing property that a number of our investors have already booked. In addition, we have a property in Rosemary Beach, Florida, that's 100 steps to the beach. It's a beautiful white sand beach. It has, when you go there, you'll have beach chairs and beach umbrellas waiting for you, beach cruisers there for you. It's just an amazing experience where you can just park your car, walk to all the restaurants and shops of Rosemary Beach, and just enjoy the week with your family. The white sand beach is one of the most beautiful sugar white sand beaches you'll ever find. And we've had great feedback on this property. In Siena, Italy, we have a penthouse that's in this old building built in the 1500s that has been modernized to include an elevator, heated and cooled floors, chef's kitchen, etc. And right out your door, you're inside the old city with all the restaurants, the history. You're also in the heart of Tuscany to go on wine tours and hiking or horseback riding in the countryside. It's also another great, amazing location. You can see that we've also upgraded and reconfigured the property to optimize it. It includes, as I mentioned, a chef's kitchen. We have 3 bedrooms and a loft. It's a very unique property in terms of its amenities for the old city of Siena.
This next property is a 6,500 square foot, 5-bedroom luxury villa in the Dominican Republic. The house sits on Punta Espada golf course, which is usually rated the #1 golf course in the Caribbean and Mexico. It's also a short golf cart ride down to the Eden Rock Beach Club, and also a short golf cart ride down to Juanillo Beach, which is just a spectacular stretch of beach there in the Cap Cana Resort. As you can see here from the photos, it's a large house with a beautiful private pool out back, indoor-outdoor living from the downstairs living room out onto the pool deck. Also, what you'll see there is Augustine. He is our private butler. So there is a casita on site with a live-in staff that takes care of your every need while you're there in residence. Pretty spectacular place.
This next home is on the sand in Costa Rica with ocean and sunset views. It's in a private gated community with 24-hour security. And you have access not just to the ocean and the water and the beach, but also all the natural all that nature within Costa Rica in terms of the hikes and the wildlife and everything there is to explore there. It's amazing with 4 bedrooms, 4.5 bathrooms. You'll see some additional pictures here that show the sunset as it sets across the ocean outside the home. This is actually our newest property of the portfolio, and we're excited for investors to begin to use it. What you can see here is our targeted portfolio for the Platinum Fund. So you can see the 6 properties the Platinum Fund currently owns, as well as where we're targeting to add additional properties to the fund. In terms of ski properties, we have Lake Tahoe, California, as you saw. We're also looking at adding Deer Valley, Jackson Hole, and Vail. In terms of West Coast beach properties, We've got Kauai and Maui we're looking at adding. We're looking at Southern California. We're looking at Cabo. On the East Coast, we're looking at Mayan Riviera, Belize, Grand Cayman, Turks and Caicos, the Bahamas, South Florida, and then leisure properties in places like Scottsdale, Sea Island, Kiowa, Manhattan, and also other areas to expand in Europe, including Portugal, Spain, and Greece.
In addition to our 20 to 25 properties through the Platinum Fund and our initial 10 residences in the Villa Fund, our investors also have access to our affiliate portfolio through the Elite Alliance and Third Home. Here you'll see an example of all the myriad of destinations that you can travel through our affiliates. It includes places like, Great Exuma in the Bahamas, St. Thomas. You can even go to Shanghai, China, Toronto, Canada, Seabrook, Sedona. The list is endless, and the residences are all curated and spectacular luxury residences that our investors have really enjoyed. This next slide kind of shows you an example of a few of the trips that our investors have been able to take through their credit exchange using equity platinum fund exchanges. It includes some pretty exclusive luxury resorts. I mean, the Maya Kama Resort there in Sonoma, California is a private residence club. It's one of the nicest private golf clubs there on the West Coast. Esperanza, Los Cabos, Mexico. It's one of my favorite destinations to go to in Mexico. Anguilla, Great Exuma, Bahamas, Sedona, Arizona. Some fantastic golf there in Sedona. And I'll even attest, our investors have had such great success, but I personally, both Greg and I are investors in the fund as well. And a lot of these destinations you see up here, I've been to Great Exuma, I've been to Esperanza. I'm actually this spring for a wedding. And frankly, a lot of people ask us, are these accessible? And the answer is yes, that you can exchange out of our fund and get access to these resort destinations, these types of properties, and enjoy quite a broader breadth and depth of vacations than just through us.
So let's talk about the investment. The fund owns the residences outright with over 90% of capital that we raise invested in real estate. We plan a portfolio liquidation and profit distribution in a set time frame of 10 years. And the money we raise from accredited investors, we buy assets with cash. One, because in some countries we can't get loans very easily. Other times it just allows us to negotiate better deals and get deals done faster. But also it reduces the risk where we can't go underwater when we own the properties outright. And it makes this a relatively low risk investment with both the financial returns and the lifestyle returns that we've discussed. So we'll talk a little bit about how we buy properties. When we're buying these multi-million-dollar residences, we take multiple approaches to that. One is that we buy at market lows. In the case of Tuscany, they took a lot longer than the US to work through their foreclosures. And then they also had one of the main banks in Siena fail and have to be rescued by the Italian government last year, which means that we're buying at 15-year lows in the Tuscany market. This allowed us to then buy the penthouse, which, as I mentioned earlier, we redesigned the layout to provide that luxury vacation experience for our investors. Another approach is opportunistic acquisitions. In Rosemary Beach, Florida, we stepped in when another buyer failed to buy a seller's property who needed to complete a 1031 exchange. We purchased the home with a 9-day all-cash close in exchange for a $200,000 price reduction. We then remodeled the entire home, upgraded kitchens, bathrooms, etc., to add significant value to the property and provide the right experience for our investors. Another approach is through developer negotiations. In Lake Tahoe, we negotiated price concessions resulting in a net price of $2.95 million, and 2 identical properties closed for $3.55 million before our home even closed. And the reason that happened is we also negotiated an extended closing of 6 months. So by the time we closed 6 months later, 2 other properties had sold for significantly more than what we were paying. In terms of the investment option, a 1-unit investment is the entry point. You can get in for roughly $150,000. That gets you anywhere between 1 to 3 weeks of usage and vacation value of roughly $12,500 to $17,000. We have annual fees that can range anywhere from $0 to $2,988. 0 is if you return half of your vacation usage, you'll eliminate that operating fee. The highest ROI, though, is actually to pay the operating fee and take the high-value vacations at those properties. From there, you can step up in half-unit increments, and we have folks that have come in at 3 units, which is roughly $470,000, where they're getting 4 to 10 weeks of usage and a lot of vacation value for their investment.
Thanks, Greg. So let's go through an example. So on this page, we'll walk through an example 2-unit investment. So at the 157 standard pricing option, it's a $315,000 upfront one-time investment. With that investment then comes 3 to 7 weeks of annual usage. A lot of people ask us, why is it variable? And we'll go through that in a few pages as we walk through our usage model and how you get to basically choose your own adventure as it pertains to what trips and how many trips you like to take with your investment. As Greg had mentioned, there is a no annual fee option. You can return half your credits to not pay an annual fee, or you can elect to pay the annual fee and take more trips. If you take all your trips for that 2-unit investment, there's something in the range of $25,000 to $35,000 of vacation value that, that alone is a 9 to 12% annual return on an investment. That is exclusive of then the real estate investment. And our current investment trajectory and portfolio is projecting a 1.5x return on the initial real estate investment. Which as you see off to the right, your total return includes a real estate investment and then a net vacation value over the term, the 10-year term of the fund. Lastly, there's also a dividend opportunity. If you don't take your trips, you can opt for a share of the excess rents from increased rental income. So what about the fine print? So what are my annual expenses? Greg had mentioned that it's $29.88. That's the annual fee, starting point for 1 unit. You can opt to have that pay no annual fee and not have a recurring cost, or you can pay that annual fee. The other expenses, everyone asks, what else, what am I going to be out of pocket for if I opt not to pay that annual fee? Well, there's a nominal visit fee per trip of $4.95 to $8.95. We've designed that to basically cover our variable operating expense while you're in residence. So it's sort of equitable to all members in that you're covering your share of costs for your personal vacations. So then what's my average cost per vacation? Well, the short answer is it's, let's call it $92 to $480, right? $100 to $500 average cost per night. Now, it's variable because you actually have a much lower cost per night if you don't pay your annual fees. That would just be basically what it essentially is about $100 per night in your visit fee for those weeks of luxury vacations that frankly have values of, $10,000 to $20,000 for that $100 a night. Which, given the fact that those vacations are worth, $10,000 to $20,000, you'll see the reason why a lot of our investors are opting to pay that annual fee and then have a cost per night around $500 because their vacation value is significantly more than that. So then, how do I make money? Well, we sell the homes, you get your initial investment back, and your pro rata share of 80% of the profits. You get to enjoy the vacations worth over $350,000 for that 2-unit investor. And then once we sell the properties, you get all your money back plus the appreciation. So continuing on that example, and those, the final questions there, people always ask, well, how do I get to use the properties and how much usage and why is it 3 to 7 weeks? Well, in this example, this investor is getting 5 weeks of vacations for their 2-unit investment. It includes witnessing the Paleo Festival in Siena, Italy. That's 60 of their 280 credits. It's going to Rosemary Beach, Florida, which is another 85 credits. North Star, California in the fall for 40 credits. Going to play golf in the Dominican Republic for 70 credits. And then at the end, there's still credits left over, and those 25 credits can be converted to go then take another trip through Elite Alliance or Third Home. So those are 5 different vacations. Now, that investor could have opted, in lieu of going to North Star in the fall for 40 credits, could have taken a ski vacation for 120 credits, and then had 4 trips instead of 5. And so at the end of the day, it's your decision on what seasons and what residences you want to vacation to for how many trips you can take. So here's the example of the value, is I talked earlier about the cost per night, right? So this is the stellar North Star residence that we have, the ski in, ski out property in Lake Tahoe. And here's the example of, you don't pay your annual fees. Well, that cost per night is $128 per night for our investors. That if you look off to the far right, that house, as we rent it to income producing renters, it's an average of $23.35 per night during ski season. And frankly, since I bring that up, I'd like to just kind of answer then, a question that I just saw come through the chat room, which was, so do you rent your properties? And the answer is yes, we do rent the properties, and that is why our annual fees are so low. So we rent the properties to offset our operating costs so that our investors have a lower cost of ownership.
So let's talk about the properties, and one question we get is, will the homes be available when I want them? And this is an area where we have an inherent advantage over other models such as destination clubs, because we give our investors priority access to the property versus a destination club giving access to members, where the members are going to absorb all the occupancy, and they expect them to run at something like 70% of occupancy. In our model, the investors are expected to take something like 30 to 35% of the occupancy after we account for exchanges, and therefore there's going to be a lot less conflict in terms of getting the weeks that you want when you book the properties. The other thing that we have in our model is that we use a very personalized reservation process. So we try to understand what it is you want to achieve. Are you trying to go skiing in February or March? Are you trying to go to Hawaii and be on the beach during your kids' spring break? And by understanding your goals, we can fit the schedule together like a puzzle, where we avoid as many conflicts as possible. And then when we do have a conflict, we are able to use our affiliate network of Lead Alliance and Third Home. So let's say you wanted to go to Park City. You found out that for whatever reason we couldn't accommodate the week that you wanted. We can then reach out to, say, the Deer Valley Club, book an accommodation there for you, and then resolve that conflict in that way. The other thing is we use a very personalized approach with our concierge, where they can assist you to make sure you have a great experience with your needs for the trip. Or if you're more wanting to dig in yourself, you can log on to our partner portal, see the availability of properties, make requests for different properties, and access it that way. We also provide short notice trips on a space available basis, and those are through our partnerships with Third Home and Elite Alliance, as far as 60 days out or 45 days out, or within the residences of the Platinum Fund portfolio. From a experience perspective, we'll talk a little bit about the accommodations, our concierge services, and the experiences that we can provide. John, do you want to talk a little bit about Cap Cana?
Yeah, so from a luxury accommodation perspective, I mean, from the simplest perspective, we ensure there are quality linens and high quality AV there, and everything that you would expect and put in your own luxury residence, so that you feel so that you're at home and you're getting the experience you expect. But then beyond that, from a luxury accommodation perspective, I mean, you can see here in Cap Cana we have a live-in staff. So a few of our homes have caretakers and daily maid service. Augustine there in Cap Cana takes care of your daily needs, and it's a pretty amazing experience.
And then we provide concierge services both through our central team as well as local hosts we have in each market to help make sure you just have a great experience. An example of one of these experiences, as you can see on the right, is we brought a chef into our Sienna penthouse, local Italian chef, and we threw a dinner party. And the chef came in, and it was an interactive process where the guests were able to participate in making ravioli from scratch, but then the chef put together the whole meal, and we had a wonderful group of about 8 people that enjoyed a wonderful dinner party with local Italian food and ingredients and wine. And that's the type of experience we want everybody to have when they visit all of our properties. You can connect with us on social media, and this is a great way to follow as we add new properties, get highlights from different trips and different experiences that people have at our properties. So we recommend that you connect with us on either Facebook, Instagram, LinkedIn, or follow us on YouTube. So what does an investment mean? An investment means a one-time investment starting at $150,000, a preferred return in the form of vacation usage at luxury vacation residences around the world. We have a no annual fee option, and the opportunity to earn cash dividends, long-term capital appreciation with an expected 1.5x return, diversified investment, both in the form of access to all types of different properties for your vacations, but also your money's diversified in different markets, because generally real estate is a very local market, and so therefore having your assets and cash spread across multiple markets reduces your risk. And then also added value from the short notice vacations we've discussed before. If you'd like to learn more, please reach out to obtain our offering memorandum. You can reach us also directly, call us or email us, and we'd be happy to answer any additional questions that you have.
Thanks. Now we're going to go into a live Q&A session. We've already had a few questions queue up. For those of you who have questions, please feel free to go over to the chat box over on the right-hand side of your screen and enter any questions that you have. Okay, we're going to get started here.
Okay, one of our first questions is that we have investors asking, what's the difference between the Equity Villa Fund and the Equity Platinum Fund? So the Equity Villa Fund was the first fund we launched. It's no longer open to new investors, and it acquired properties around $1 million to $1.5 million in value. Mainly in and around the US. It also has one in Mexico. Our Platinum Fund, however, which is the one that's currently open to investors, takes it to the next level with $1.5 to $4 million properties that are just in fantastic locations and amazing fit and finish. In fact, I'll put our properties in the Platinum Fund up against anybody out there in the market. They're just spectacular ski in, ski out, beachfront, resort properties, just top-notch properties with top-notch experience.
So another question that just came through was, do you provide a master matrix of credits by week for each property so the investors can plan and understand the trade-offs? And then how far in advance do you need to ensure you get the properties you want to book that? So I'll answer both of those questions there. And the first one is, yes, we provide a master matrix. And as Greg kind of walked through, there's actually a partner portal where you can log on and see all the real-time availability of our properties. You can actually make a reservation through the partner portal that'll go to our local concierge team to help you facilitate that reservation. You can see all the credits by week as to what it requires to book those properties and make those decisions kind of in advance of the reservation year. And as far as how far in advance you need, well, frankly, we have the right kind of investor per property ratio, and the fact that not all of our weeks are allocated to investors. Like other destination club models, 70% of their weeks are allocated to investors. And in our model, 35 to 40% of our weeks are actually occupied by our investor weeks. So when investors are choosing their vacations, there's not a lot of conflict, there's not a lot of competition, and we found that our investors are getting the weeks they want. So yes, you can book up to a year out if that's something that you want to ensure that you get the residents at the appropriate holiday season that you want to travel with your family, or for a wedding event, or for a specific spring break. You can book those 6 to 9 months out. But you don't have to, and we have investors booking trips 3 and 4 months out, even 3 weeks out, and still getting summer weeks in Hawaii for their family vacations.
Another question is, what visibility do you have into the fund performance? So our financials are audited annually by an external auditor, and we provide that audited report to investors once it's published. In addition, we complete an annual report that summarizes both the performance of the fund as well as where we see that performance going in the future and upcoming plans for the fund that we publish and provide to investors on an annual basis. And then in addition, we also hold an annual investor webinar each year, which is an opportunity to see where we're taking the fund, ask questions, and make sure that you get all your questions answered and understand where we're headed, what properties we're planning to add, etc. But it's our goal to provide clear transparency into the fund and into your investment.
Another question that came through is how are we different from fractionals? And in our pre-webinar survey, we did notice that several of you were looking at fractional real estate as an option in this investment class. We actually have a vacation investment guide, so that basically walks through all the different options from second home ownership to fractionals to just renting properties. Feel free to reach out to us and we'll send you a copy of that investment guide. But at the end of the day, our model is very similar to fractional in that it is deeded real estate and you own the real estate, but we have a much lower cost model and a higher return model in the long term. So we'd be free to share you our thoughts on that.
Yeah, just to add to that, our model is really about investment and having a lot of flexibility and options, more so than what you'd be able to find in a fractional type model. With that, we're actually out of time, but if you have additional questions, please reach out to John or myself. For those who are interested in an investment, we're happy to provide accredited investors with our offering memorandum. And with that, we're going to sign off.
Thanks, everybody, for attending.